What are three immediate impacts that we are going to see here in Los Angeles as a result of the 2025 Los Angeles wildfires? Watch this video. It's impossible to comprehend the damage, the devastation, and the annihilation as a result of these wildfires that we've witnessed. And I've grown up here in Southern California, and I've lived here my entire life. And I gotta be honest with you, I've never seen anything like it. And we've had earthquakes, we've had wildfires in the past, we've had flooding in the past, but nothing like this. So, what do I want to talk about today is the three impacts that we're going to see as a result of these wildfires that absolutely ravaged our city. Let's get right to it. And the first one is probably the most obvious, and that is insurance costs will be going up. So between 2020 and 2022, insurance companies actually declined to renew 2.8 million homeowners policies in the state, according to the most recent data from the California Department of Insurance. And that includes 531,000 in Los Angeles County, where the fires actually took place. Now, some of those policies were not renewed by homeowners, according to the insurance industry, but most of these policies were actually canceled by the insureds. And so the issue has really continued to build over the past several years. So between the rising threat of wildfires and insurance companies pulling back on offering coverage in these large swaths of California at risk for these devastating disasters, it has really become a crisis for homeowners throughout the state. Now, the problem of canceled policies has forced some homeowners either to go without fire insurance or to use a program set up by the state, but without taxpayer support, called the California Fair Plan. Those policies have higher premiums than traditional private insurance and less coverage, often requiring homeowners to buy this additional wraparound coverage at even a higher cost. And we've seen this many times on our listings or buyers that we work with that are buying in fire zones, and a lot of times their entire annual premium can be between $10,000 to $15,000. That's not uncommon. Now, although the Fair Plan is supposed to be a last resort insurance provider, demand for its policies has skyrocketed. So its exposure for dwellings as of September of 2024 was up 61% to $458 billion just from a year earlier, and triple where it stood only 4 years ago. So its exposure for commercial policies has risen even faster, nearly doubling to $26.6 billion as of September and up 464% in the last 4 years. And so to give California homeowners in high-risk areas an alternative to California Fair Plan, well, the California Department of Insurance just a couple weeks ago announced new regulations designed to get private insurers to start writing policies in fire-prone parts of the state. The policies designed to get private insurers to take back much of the coverage now handled by the California Fair Plan. Now, the rules will require that insurers need to write policies in fire-prone areas equal to at least 85% of their market share throughout the state. But the policy also gives insurers one thing they've been seeking for years, and that's the ability to factor in the cost of reinsurance policies, which are policies they buy from other firms to spread their risk as part of the rate calculations. California has been the only state that didn't allow the cost of reinsurance to be part of the rate calculations. So reinsurance has been rising due to both the risk posed by climate change and the increasing cost of claims due to inflation, the rising price of labor, lumber, other raw materials. And remember about lumber and other raw materials, we're going to get to that in a minute. So the rate that private insurers charge is very likely to increase as a result of this new policy. And what I've been hearing after talking to so many people in the insurance industry over the course of the last week, do not be surprised if policies actually increase between 30 to 50% as a result of these wildfires. Number 2 is I expect rents to increase throughout Los Angeles County. So rents in Los Angeles were actually going down for a good portion of last year, but the wildfires could easily reverse that trend. And with thousands of Los Angeles homeowners seeking refuge from the wrath of the wildfires, the fallout from the destruction could include actually higher rent prices across the city, where more than half of the residents are renters. Now, while the fires have struck areas where some homes are worth many millions of dollars, the potential rise in rents in Los Angeles could also spill over into other less pricey neighborhoods, worsening the costs in an already expensive city. So you have to remember that not everybody is going to be able to afford a $10,000 to $25,000 a month rental if their house burned down, right? So you're gonna see the apartments and smaller houses, there's gonna be a lot more competition for those. So the doubling of growth or tripling of rent growth is absolutely possible due to the lack of housing supply in Los Angeles, and that the availability of some rentals could spread by word of mouth as displaced homeowners seek shelter, which is not captured by all the real estate models. So the increase in rent prices could even be higher. And in fact, there could even be certain landlords who seek to cash in on the opportunity, which I'm actually kind of already seeing to see, unfortunately, where you're going to see some price gouging, especially for some of the very desirable rentals. California is actually the most underhoused state in the nation right now. So there is a chronic housing shortage. We've talked about it here on our channel for years. And I think the fires will cause a major shock to the housing market as people are actually trying to scramble to find housing. And the Los Angeles fires have created an estimated, right now they're talking over 150 billion or more in damage. And so many people, right, have either lost their lives, they've been forced to evacuate, they've been displaced, they can't go back home. And after thousands of people were displaced, as we've seen over the last several years, when it comes to maybe a hurricane or a tornado throughout the country, right? There's a big difference between those as opposed to, right, we're dealing with a fire. So to give you an idea, when you have flood damage, it's a lot quicker to be able to repair flood damage than it is fire damage. And so one of the things that I think that you're going to really kind of make a difference here in Southern California is that because we don't have the availability or the vacancy like you had maybe in other parts of the country, I think that's really going to make a difference where the rents really could be going crazy again. And I think if you had a larger vacancy to begin with, that would probably help hold back the rents from going crazy. So I really think it's a different story maybe in other parts of the country when you have a natural disaster as opposed to here in Los Angeles. And with Los Angeles being more housing starved than the rest of the country, well, it makes sense that it's going to be a situation where you're going to see the rent prices easily rise by 8 to 12%. So again, fire damage typically takes a lot longer to repair and rebuild than flood damage. So demand for rentals around Los Angeles is going to stay elevated for longer than in the wake of a flood or a hurricane or something of that nature. So just to give you an idea, you recently had a hurricane back in Houston, Texas. Hurricane Harvey hit in 2017. Now, when that actually hit, Houston's vacancy rate was actually 11.4%. And that refers to the share of rental units that are vacant or unoccupied. Well, nationally, it's about 8%. But guess what? In Los Angeles, the vacancy rate is right now is 5.1%, one of the lowest in the entire United States, only behind New York and Orange County, which obviously is next door to Los Angeles County. Did you know the median rent this month in the Pacific Palisades part of Los Angeles was $10,000, according to Zumper, a rental listing site? Now, that figure included rentals with any number of bedrooms and any type of property. That's 417% higher than the national average. In Los Angeles County, 54% of the residents are renters. And the city said in September, that number has actually gone up over the course of the last 2 years. And among that group, nearly 60% were cost burdened, meaning they were paying more than 30% of their household income on rent. So the Los Angeles metro area consistently ranks as one of the most expensive rental markets in this US median rent, right? And as of January 9th, that median rent was $3,000 according to Zumper a month. That's 50% higher, actually 52% to be exact, higher than the national average. The projected uptick in rents in the wake of the fires comes as Los Angeles tenants were actually starting to see some relief from pandemic-era rent increases. Rents for listing on Zumper's site had actually dropped 21% in January since last year of 2024. And Zillow found that the median rents in Los Angeles market have fallen since January 2024 as well. So again, as a result of having a shortage, I do expect rental prices to increase. And number 3 is the one where I actually think a lot of people haven't really started thinking about fully. And that is the cost to remodel or build is going to go up. Several years ago, we had a buyer buy a home out in Ojai, very close to Ventura. And the home that our seller bought, it was a single story, about 2,700 square feet of living space, but everything was original, and she needed to remodel everything. The kitchen, the bathrooms, the plumbing, the flooring, paint, take off the acoustic ceiling. So many things needed to be done. And she budgeted around $200,000 to be able to have all the work done. Well, about 6 months prior, there was a major fire in Ventura. And when she tried to contact all the contractors up there in Ventura to be able to actually help her with their job, none of the contractors wanted anything to do with her because they deemed her job not big enough, because they were working on massive jobs of actually being able to rebuild and reconstruct houses. So for them, her job, even though it was a $200,000 job, just wasn't worth it to them. And so some of the contractors that were willing to do it were basically charging her double. Instead of $200,000, they wanted to charge her almost $400,000. So what she ended up doing was she ended up getting a contractor from the San Fernando Valley, and it ended up costing her about $50,000 more than it probably would have if she was able to get a contractor who worked there locally. And I expect to see this trend play out. You know, a lot of times we've had wildfires in the past. You're talking about maybe one small neighborhood, a couple streets, but you are talking here in the Pacific Palisades, 75% of the community has been destroyed. Not just houses, but the community. And so you're talking about rebuilding commercial as well as residential homes and businesses throughout LA County. And it is going to be a massive project. And what do you think is going to happen with the cost of lumber, concrete, labor? All these things are going to go up. And let me tell you that you may be thinking, well, it doesn't affect me. My house didn't burn down. But if you're looking to remodel your house, maybe you want to put on an ADU, maybe you want to expand your house, maybe you're looking to do something big to your house, even though your house wasn't affected necessarily by the fires themselves, the cost of materials is going to go up because there's only an infinite number of supplies that is available. And I expect to see those prices go up in the next few months. In addition to that, I think also it's going to be harder to find contractors, just like the story I gave you about our client moving to Ojai, right? Now, there's a lot of houses that are obviously huge, right? We're talking 4,000, 8,000 square foot homes. there's only a limited number of contractors that can do quality work to be able to rebuild all of those homes. Now, not everybody's going to rebuild. Some people will take the insurance money and actually cash out, and they'll leave and go somewhere else. Well, let's talk about that, right? So this is a question everybody should be having with their insurance agent right now. The first one is loss of use. So I always recommend to our clients that you need at least 2 years loss of use, right? Because, in today's world, it takes a long time to get permits and plans and get everything in place. And by the time you have an architect come out, and the whole process takes a minimum of 2 years. But let's just say, for example, your rebuild cost is $1 million, 1.5. That's what you have to rebuild, right? Well, because it's going to be supply and demand situation, right? So maybe, for the most part in LA County, it's closer to about $400 a square foot to build right now. But because there's only so many contractors that you have available at your disposal, so maybe it's going to cost you $425, $430, $450 a square foot instead. So while the insurance company is giving you maybe $1 or $1.5 million to rebuild, it could be a situation where it might cost you $2 million to rebuild, $2.5 million to rebuild, and you're going to be short, and you're going to have to find a way to come up with the difference. Some people are going to be able to do that, some people aren't. And I think that's another problem that you're going to see as a result of this, because again, there's only so many people here that are going to be able to build houses. Again, you're talking about thousands of structures, not just hundreds, not tens of, you're talking about thousands upon thousands of structures that are going to need to be rebuilt. It's just an absolutely devastating and heartbreaking situation. We've been working here in the community to try to put people in touch with, one, if they need housing. So if that's something you need, reach out to us. We're working with our relationship with other agents to put them in reasonable housing, number one. If you need help, maybe it's just a place for your pets to be staying right now while you figure it out, reach out to us. We have a lot of contacts because we are highly involved with a lot of different animal groups here in Southern California. But maybe you just need clothes. We just helped one of our clients recently. We're trying to get their 13-year-old daughter some clothes and makeup, the simplest of things, right? Because they had a family member who lost their house in these fires. So if you need help, you need assistance, reach out to us. We have a lot of resources for us. And you have any questions about how this is all going to affect everything here in Southern California, feel free to contact us and have a conversation with you as well. We'd love just to be a resource of information. And we're going to be posting a lot more videos about this, because I think there's a lot of things that people are going to need to know as we move forward. And this is just the beginning, and hope everybody's safe and sound, and we will see you on the next video.